The first measure relates to term liquidity facility of rupees 50,000 crore to ease access to emergency health services. To boost provision of immediate liquidity for ramping up COVID-related healthcare infrastructure and services in the country, an on-tap liquidity window of rupees 50,000 crores, rupees 50,000 crore with tenor of up to 3 years at the repo rate is being opened till March 31st, 2022. That is March 31st of next year. Under the scheme, banks can provide fresh lending support to a wide ranging of entities including vaccine manufacturers, importers and suppliers of vaccine and priority medical devices, hospitals and dispensaries, pathology labs, manufacturers and suppliers of oxygen and ventilators, importers of vaccine and COVID-related drugs, logistics firms and also patients for treatment. Banks are being incentivized for quick delivery of credit under the scheme through extension of priority sector classification to such lending, and this facility will be available up to 31st March next year, that is 31st March of 2022. These loans will continue to be classified under priority sector till repayment or maturity, whichever is earlier. Banks may deliver these loans to borrowers directly or through intermediary financial entities regulated by the Reserve Bank of India. Banks are expected to create a COVID loan book under the scheme. By way of an additional incentive, such banks will be eligible to park their surplus liquidity up to the size of COVID loan book with the RBI under the reverse repo window at a rate which is 25 basis points lower than the repo rate, or termed in a different way, that is explained in a different way, 40 basis points higher than the reverse repo rate. So this is an additional incentive that is being given to the extent that they are using this window and they are lending, and to the extent that is available in their COVID loan book which they are going to create. Whatever is the loan disbursed under that window, equivalent amount they can put it in reverse repo at a rate which is 40 bips higher than the normal reverse repo rate which prevails today. Second measure, the next measure relates to special long-term repo operations, SLTRO, for small finance banks, SFBs. Small finance banks have been playing a prominent role by acting as a conduit for last mile supply of credit to individuals and small businesses. To provide further support to small business units, micro and small industries and other unorganized sector entities who are adversely affected during the current wave of the pandemic, it has been decided to conduct special 3-year long-term repo operations, that is 3-year SLTRO of rupees 10,000 crore at repo rate for the small finance banks to be deployed for fresh lending of up to rupees 10 lakh per borrower. This facility will be available till 31st October 21. Next measure relates to lending by small finance banks, that is SFBs, for on lending to SFBs for on lending to MFIs to be classified as priority sector lending. At present, as you would be aware, lending by small finance banks to microfinance institutions for on lending is not reckoned for the purpose of priority sector lending classification. In view of the fresh challenges brought on by the pandemic and to address the emergent liquidity position of the smaller MFIs, SFBs are now being permitted to reckon fresh lending to smaller MFIs with asset size of up to rupees 500 crore for on lending to individual borrowers as priority sector lending. This facility will be available up to 31st March 22. Next announcement relates to credit to MSME entrepreneurs. With a view to incentivize credit flow to micro, small and medium enterprises, that is MSME borrowers, in February 2021, the scheduled commercial banks were allowed to deduct credit disbursed to new MSME borrowers from their net time and demand liabilities, that is NDTL, for calculation of their cash reserve ratio, CRR. in order to further incentivize inclusion of unbanked MSMEs into the banking system. This exemption, which is currently available for exposures of up to 25 lakh and for credit disbursed up to fortnight ending 1st October 21, is being extended till 31st December 21. The next measure relates to Resolution Framework 2.0 for COVID-related stressed assets of individuals, small businesses and MSMEs. The resurgence of COVID-19 pandemic in India in recent weeks and the associated containment measures adopted at local and regional levels have created new uncertainties and impacted the nascent economic revival that was taking shape. In this environment, the most vulnerable category of borrowers are individual borrowers, small businesses and MSMEs. The following set of measures are being announced today, specifically targeting these groups of borrowers. And this particular set of announcements, there are three components to it. The first component is as follows. Borrowers, that is individuals and small businesses and MSMEs having aggregate exposure of up to rupees 25 crore and who have not availed restructuring under any of the earlier restructuring frameworks, including the Resolution Framework 1.0 of RBI dated 6th August 2020, and who were classified as standard as on 31st March 2021, shall be eligible to be considered under the Resolution Framework 2.0. Restructuring under the proposed framework may be invoked up to 30th September and shall have to be implemented within 90 days after invocation. In respect of, and the second component, now I am proceeding to the second component of this set of announcement. In respect of individual borrowers and small businesses who have availed restructuring of their loans under the Resolution Framework 1.0, where the resolution plan permitted moratorium of less than 2 years, lending institutions are being permitted to use this window to modify such plans to the extent of increasing the period of moratorium and or extending the residual tenure up to a total of 2 years. Other conditions will continue to remain the same. And the third component relates to small businesses and MSMEs which were restructured earlier, and this measure is intended to ease their working capital accommodation and the working capital availability for small businesses and MSMEs. And the announcement is as follows. In respect of small businesses and MSMEs restructured earlier, lending institutions are being permitted as a one-time measure to review the working capital sanction limits based on a reassessment of the working capital cycle, margins, etc. The next announcement relates to rationalization of compliance to KYC requirements. Taking forward the initiative of the RBI for enhancing customer convenience, it has been decided to rationalize certain components of the extant KYC norms. These include A. Extending the scope to video KYC known as video-based customer identification process, that is VSIP, for a new category of customers such as proprietorship firms, authorized signatories and beneficial owners of legal entities, and for periodic updation of KYC. B. Conversion of limited KYC accounts opened on the basis of Aadhaar eKYC authentication in non-face-to-face mode to fully KYC compliant accounts. C. Enabling the use of KYC identifier of centralized KYC registry for VSIP and submission of electronic documents including identity documents issued through DigiLocker as identity proof. And D. Introduction of more customer-friendly options including use of digital channels for the purpose of periodic updation of KYC details of customers. And further, keeping in view the COVID-related restrictions in various parts of the country, regulated entities, that is regulated entities that is entities, financial entities regulated by the RBI, are being advised that for the customer accounts where periodic KYC updating is due or pending, no punitive restriction on operation of customer accounts shall be imposed till 31st December 21. Unless warranted due to any other reason or under instructions of any other regulator, enforcement agency, court of law, etc. Account holders are, however, requested to update their KYC during this period. The next announcement relates to utilization of floating provisions and counter-cyclical provisioning buffer. In order to mitigate the pandemic-related stress on banks and as a measure to enable capital conservation, banks are being allowed to utilize 100% of floating provisions or counter-cyclical provisioning buffer held by them as on 31st December 2020 for making specific provisions for non-performing assets with prior approval of their respective boards. Such utilization is permitted with immediate effect and up to 31st March 22. The final announcement is relates to relaxation in overdraft facility for state governments. To enable the state governments to better manage their fiscal situation in terms of their cash flows and market borrowing, certain relaxations are being permitted with regard to availment of overdraft facilities. Accordingly, the maximum number of days of overdraft, that is OD, in a quarter is being increased from 36 to 50 days, and the number of consecutive days of OD from 14 to 21 days. This facility will be available up to September 30th of this year. The Ways and Means advance limits of states have already been enhanced on 23rd April this year. The relevant circulars and notifications relating to all the announcements which I have made will be issued separately starting today. Let me now conclude and state as follows. The immediate objective is to preserve human life and restore livelihoods through all means possible. The second wave, though debilitating, is not insurmountable. As I have said earlier, it is during our darkest moments that we must focus on the light. We have lessons to draw from our experience of last year when as a nation we came together and overcame the once-in-a-generation challenge imposed by the first wave of the pandemic. At the RBI, we stand in battle readiness to ensure that financial conditions remain congenial and markets continue to work efficiently. We will work in close coordination with the government to ameliorate the extreme travels that our citizens are undergoing in this hour of distress. We are committed to go unconventional and devise new responses as and when the situation demands. We must also stay focused on our future, which appears bright even at this juncture, with India set to emerge as one of the fastest growing economies in the world. Today, we have taken some steps, we meaning the Reserve Bank of India. Today, we have taken some steps and we will continue to be proactive throughout the year, taking small and big steps to deal with the evolving situation. We must remain resolutely focused on a post-pandemic future of strong and sustainable growth with macroeconomic and financial stability. I call upon all stakeholders to come forward once again to address the challenges posed by the current wave of the pandemic